jump into any question, if you could just give me quick intro about what was the responsibility that you were doing and what is your expertise.
Yeah, so I'm Sebastian. Today, I'm VP of Banking at Regulators. And before that, I worked at Lunar, a Danish fintech, and now bank for the last 8.5 years. And as part of my time at Lunar, I both led how we became a bank, how to actually apply for a banking license, all that work. I also led a lot of our product work before when we were a fintech, together with our partner banks. And when we succeeded getting the banking license, full banking license in Denmark, I've started to focus on how to then build a bank
Yeah.
in a modern way. So with modern scalable infrastructure that is modular and built for scale across markets, and being able to take in millions of customers. So that is something I've been focusing on for the last 4 to 5 years. I also led a new business segment in Lunar where we started to sell our infrastructure. I led it from a product point of view. So actually opening up the infrastructure we built across the Nordics for other licensed institutes to integrate to our APIs and start sending and receiving payments, and building products on top of this in the Nordics. So that is my history.
Big background. Yeah. So Lunar is one of the few successful neobanks that survived the big boom. So definitely keen to learn a little bit more from you about how to build a bank. That's I think you're a really relevant person to talk about this. If we start from very beginning, I'm the founder. I'm thinking about, hey, I want to build a neobank. What would you tell me as a first things to think about, before, raising funds, for example? What would be the first steps that you tell me, hey, Simon, you need to think about all these things?
Who's your target audience? Who do you want to build products for? Why? And how do you going to differentiate against all those right now quite mature fintechs and competitors that are already out there? I think that's some key questions to answer, because especially starting as a new fintech in something that is now quite mature with a lot of strong challenger banks and also incumbents around, especially Europe, you really need to think about what you can offer your customers or target customers that the current businesses can't. I think that's key to find your place to compete in the current market.
And how would you do it in terms of, okay, who is my targeted and what problem I'm going to solve? Well, how should I find this?
I would try to find unsolved problems or needs that aren't probably met yet. See if there is, for example, within businesses, are there a segment within businesses that are underserved, which I could do better than what's already out there, and focus on that specific need first, and then I can always expand later. But trying to find the need that are underserved and also do custom interviews, test my hypothesis and stuff like that before just going ahead building, to figure out whether the need I've seen does it have any value, to make some assumptions on, like, how big is my market, what potential is there if I go ahead building a product in that segment or for that segment.
No, definitely, right. So I heard about startups that build product and then eventually they haven't found a product market fit, right? So that makes sense. So first it would be find the problem, find the target audience that's good, validate it with them, right? So how would you validate the hypothesis? Interviews, okay.
It could be interviews or prototypes, making nowadays you can make prototypes in no time.
Yeah.
So making some prototypes, trying to get it in the hands of potential customers, getting the immediate feedback, Test some of those hypotheses you have with real-time interviews and customer feedback. I think that has become so much easier today than it was just a couple of years ago. So I think there's so many opportunities today to test ideas and hypotheses quite easily and cheaply today.
Definitely, no. That's the beauty, right? Fast, the speed and cost. At the end of the day, it's big
Yeah.
measures. So okay, so right now I know what is the problem. I know who is my target audience. They said, "Hey, this is something I'm willing to pay for example, to solve this problem." And for example, I would say, okay, so now is the raising capital. Let's build the MVP. How would you go around this? Should I go? This is the licensing question, right? Should I go directly say, hey, I know there's a niche, I know there's a problem. I spoke to founders actually who already have clients because they have other businesses and they just want to build a neobank as a merging all the businesses together. So what should be, for example, the step? Should I go directly for the banking license because I want to issue loans, or the bus or EMI?
Yeah, I think if you don't have excessive amount of capital and some kind of history within banking, it will probably be quite difficult to go directly to licenses and just get a license. It's a quite heavy process where, especially for a full banking license, where you need to submit a lot of policies, you need to show a business model, how to build a feasible business, and you need to have the competencies as well in the business to actually run a bank as well. And without any history, it can be quite difficult, I would assume, to convince regulators that you should have a banking license. So I think a natural journey would probably be that you start out as simple as possible, partnering up with another licensing entity where you as such operate without a license. You can get up and running way faster and cheaper than if you want a banking license first or a PI license first. And by doing that, you can test your market. You can actually show that you can build a profitable business, or at least a business that can become profitable. And then in time, you can work towards becoming a fully licensed bank yourself, or payment institute yourself, if that is believed necessary. There's definitely advantages of becoming a licensed institute yourself, because you become more in control. You don't rely on others and their policies and so on. So there's so many advantages in time of becoming independent in regards to the license. It just comes with a lot of additional focus areas within, AML, legal compliance, having people that are actually fit to run a bank and so on, which you don't have to have in the same degree, at least, when you just operate as a tech company that are building an awesome product on top of a banking as a service proposition or similar. So you need to also be ready as an organization to grow as you take upon more and more responsibility and become a bank or a PI for that matter. So I would definitely, if I were to start tomorrow, I would probably start finding a partner that had a BaaS license or similar, depending on the product I want to build, and then build my initial product on top of that. Find one that I could fit all my needs in that region I want to build the product in. And then in time, when I would start the process of becoming independent, and also start building all the capabilities I believe were necessary in my tech team to run more independently, both within the core banking, payment integrations, cards, and so on. And you don't need to do everything at once. You could do it iteratively, but I would take it as a journey, probably with an end goal of being fully licensed myself and independent. But for me, that can be a multi-year journey you take.
But how would you say, how Romans would say, bank wasn't built in a day, right?
Yeah.
Yeah, it makes sense. So I had a meeting last week with Zazu, which is for African Neobank, but by ex-Solaris people, right? So they and yesterday I had a meeting with Ripon, and it's funny. So they said they say similar things to you. They say, "Hey, we went for bus because it's the fastest, it's the cheapest," etc. But then, for example, Ribbon had issues with the bus providers, because they particular, I don't remember the name of the company, but they went out of business. They had to be
Mm.
bought, and another one, they had another issue. So eventually, before even going live, they had beta users, but before going live, they applied for licenses. They said it's way easier, So maybe also there could be a potential for people who think about it, like, hey, maybe as we are saying, right? If I have experience, I know what I'm doing,
Mm.
then let's go right away to EMI. And because, of course, I think people at the beginning, this is more for people to understand what is the whole structure, what they need to do before launch a fintech, payment institution, or EMI. Actually, payment institution is not so relevant. But the difference between banking as a service and EMI, right? What is the biggest distinguisher that can help me to say, hey, I want the EMI license, or actually I don't care about EMI license. I am totally happy with banking as a service because I just want to have cool front end and amazing features, and then just sell
I
partner services.
It probably depends on how much in control you want to be,
Uh
like
huh.
as you also said, because when you partner with a best partner, you rely on their license, you rely on their technology stack, you rely on their integrations.
Mm.
So in the end, they can impact to quite a high degree
Yeah.
what customer experience you can provide to your end consumers. And if you become an EMI, you still rely on others. Like you still need to find a partner bank that are willing to partner with you. You potentially still need to find partners for payment integrations. You can do way more with an EMI yourself today. So EBA at least has enabled you to do quite a lot now as an EMI compared to just some years ago, where you kind of needed a full banking license to really um, participate in the clearing, to issue cards and so on.
Mm.
So I think it's back to, as you also said, does the founding team have experience within banking? Do they know what is required to build an EMI?
Mm.
Then I think you can definitely go ahead building an EMI from day one. But it also, like, you need to have a team in place to actually go there, and the path to getting into production may be longer than if you just partnered with a base provider, because it's kind of, you get everything in a box where some of them is quite modular, so you can decide what to do and you can launch in a country pretty fast. You can even, if you want to get their app and slowly build your own on the side when ready. So I think it's a balance of, what competences do you have in-house from day one? How important is it for you to be in control? What's your capital? Like, how much capital do you actually have to build an incredible big tech and product team to build the products that you need? Sign a lot of agreements with banks and so on if you want to be an EMI. So there's a lot of cost coming into becoming independent and having your own license, which you at least initially can avoid if you want to go with the BAS, where they have already taken a lot of these costs and complexities away from you. Um,
And and so I'm already have the idea. I decided whether, or one thing is, I get the funds, and then I'm thinking, okay, big question that I heard a lot, or there were a lot of articles about build or buy, right? So for example, the company I work in, they provide core banking system, but also they provide card processing, they provide provide mobile app, internet banking, but they focus on the EMIs, right? It's not banking as a service. They have other company for that, and
Yeah.
you are able to use their licenses. But so I understand there is the steer, but then you need to apply for the license. But then also what I see that we are not so flexible, right? It's box solution, kind of a non-monolithic kind of what is the opposite? Modular. You can plug and plug other providers if you need. But then I read one article and they said, hey, if you focus on long-term vision, if you know that this is a long-term game and you've got the funds probably as well, you should focus on building stuff. Revolut, N26, Starlink, Moniz. I think it's Moniz or Monzo. They have their own core banking as well.
Today, but
Yeah.
not when they started.
Yeah.
So I think, a lot of these, I try to be quite pragmatic on that approach, because building your own core banking system, building all payment integrations yourself, building a card scheme, all the card processing setup, all that stuff is very complex. It takes a lot of time, and in general, it requires quite a lot of knowledge and effort. And yes, if you had infinite employees and you had enough time, yes, go ahead, build everything yourself. But in reality, that's seldomly the case. And most of those you mentioned, they've all started by using third parties for a lot of the services I just mentioned. So I try to be pragmatic in a way. I think I said it early on as well. I think you need to early on have a vision of where you want to get. And that's a 3 to 5 year vision. You also need to be quite clear about what you believe will be your core differentiators and what services you believe you need to own from day one to differentiate. And the rest, you shouldn't be afraid of outsourcing, at least from day one.
Yeah.
And then be very strategic what you outsource and to who. Because I at least believe that everything you outsource should be modular and independent.
Yeah.
And not buying everything from one partner, because that's a huge concentration risk, first of all.
Yeah.
But also it will make the migration out of such a partner very, very difficult and complex. So I'm a huge fan of everything you build should be modular and independent. So you find a world-class partner for a ledger system or a core. For me, core banking is ledger interest postings. Find a world-class partner for that. Find world-class partners for payment integrations for wherever you want to do payments. Find a world-class partner for card processing. It's just now I'm just mentioning what you could outsource. And then decide upon managing all that infrastructure. What do we need to build ourselves? What do we believe of all these services that we need to be in control of ourselves? When we've done that analysis, we can then start to assess who should we then outsource the rest to. And then when I say be very strategic about it, for me, that doesn't mean that you've outsourced to that company for 5 or 7 years from now. But you outsource now because you need to launch something in production soon and not in 3 years. So for me, you outsource to get a lot of hopefully a great product that you can scale with and so on, but also to get to market faster. And then you can always reassess ongoingly. Is it the right partner? Is now the right time to insource? And if so, what do we want to insource first, and so on? And it's probably back to, I find it's really important that they are independent and modular. So you can take one piece at a time to either outsource to another party or build it yourself, so that you in time have maybe a fully owned build system or an amazing setup that just works with also external parties. So yeah, I try to be quite pragmatic about it. And yes, today a lot of those you mentioned, they have built a lot themselves, but it has come over many, many years where they, in a long time period, have outsourced some of those services to get to where they are today. And for me, it's also great for benchmarking. when you want to build a competing internal service, you can benchmark performance and minimum viable product before you launch something. So it's also very, very good for learning in the teams that are building, like what are minimum requirements we need to build to have something that can even compete with what we have outsourced currently.
Yeah, makes sense. So now we've got the back end, right? We decided that we will go either with banking as a service or EMI license. Now we know we will outsource a lot of stuff. Big question is what about the features and the front ends? Because this is probably, I don't know how the bank works in background if I'm the average user. But the only thing is how I see how it looks, the user experience. Though, I need to kind of prioritize what I'm gonna do first. Will I build a feature-rich user app, mobile app, or app, or will I build something that is really easy to use, the bare minimum, but it's super easy to use and it's solving that particular one problem? What should I focus on when building this basically mobile app?
I think great user experience being focused. Like, how do we make something that is really simple and easy for our customers to use? And then for me, it's probably back to I'm quite pragmatic as a person. If you want to have an app that can everything from day one, it will take quite a while to get there. So for me, it's having some kind of principles for how will it look, and then of course always iterate on that as your product grow. But for me, I'm a way bigger fan of launching features and products fast, iterating and improving your product with new services, new features as time goes, to deliver value for customers fast, but also for the business. In the end, we all build products to have we need to have a sustainable business to also be here in a year or two, to still bring value to our customers. So for me, it's a matter of how can we deliver a good enough product with good enough features to our customers in due time, where user experience and simplicity is in focus, and then ongoingly add more functionalities to that product or offering. That is how I would approach it, at least. But
makes sense. No, that's a good point, because how I actually thought about it is like, okay, I need to bring all the features that all the players already have, and then I need to add others, right? So cards, payments, instant payments, cross-border payments, then budgeting tool, right? Some gamification or whatever, all these things to make me use the app all the time. But if you should say, okay, so I want to build a neobank that definitely right now, I guess, or maybe that's a question, or I shouldn't maybe put words in your mouth. What are the critical things that neobank EMI should have for functionalities, and also what are the functionalities that are like maybe something that you see or you don't see but should be there?
I actually think it's back to what pains you're trying to solve and what customers you're building products for. Because you can easily find customer segments or needs where you don't need the full flat banking experience from day one, just as long as you're very aware of what I'm building now and what I'm launching now is for this segment, and what is my vision? Like, where do I want to be with this product in 1 or 2 years, so that you know what you're building towards, instead of waiting 2 years to launch the product. But I think foundational stuff of any bank is probably you have an account that can send and receive payments. And then you can discuss what kind of payments. I would say that depends a lot on the segment, like whether it's some of the new, it's called peer-to-peer payment solutions that are in some countries, like mobile pay in Denmark. And then again, whether it's for businesses and consumers, it also depends on like how you enable mobile pay depends on your customer segment, as is one solution for businesses and another solution for consumers.
Yeah.
So again, the priority of that depends on the segment. But I would say having an account, being able to see your transactions, doing payments is foundational stuff that you need to be able to do as a bank. The cards is also relatively foundational nowadays. But that for me is foundational stuff you need to have. And then all the rest, building a nice user experience, savings, spend management, expense management for businesses or employee cars. There's so many stuff you can build on top, but you can't build those without the foundational stuff. And then it's a matter of what user experience do you want to give your customers, what pains are you trying to solve, what's the next things you want to target, and so on. But I think that, and then of course a smooth onboarding flow for your customers that are as frictionless as possible, and still being compliant. I think that is key, because there's all the major fintechs today, they have a quite good onboarding flow, and if you then launch something with a lot of friction, you'll probably have a quite high drop-off rate, and you'll probably see that your competitors end up getting most of your targeted customers anyway. So I think that's, of course, also an area where you always need to improve, to ensure that you have as frictionless and good an onboarding flow as possible, to enable that your customers hopefully in minutes can get onboarded into your bank, without any manual work for employees and them. I think that should be the ideal target. And then, of course, there's so many regulations across Europe that sometimes causes headaches for reaching that target. But
I 4 years ago wrote an article with one company that they do qualitative and qualitative analysis of fintech apps, right? And we together calculated how many steps it takes from not having the account to sending first payment to my brother, because it happened to me. He was at the airport, needed money because of something, and I was like, okay, so go download Revolut, I will send it to you right away, right? So I think, and then there was also including KYC, right? So how many steps does it take to open an account? And I think, Revolut was like, let's say 16, and 26 was 35. And I'm just from top of my head, I don't know exactly. And then there was like HSBC, like 105, which was mental, basically. So definitely Revolut, this was something that probably was a game changer for them. That it was so easy to, or it is actually so easy to open the bank account.
Yeah, definitely.
And if I build everything, I have all the licenses, I have the mobile app, how do I make money?
That's a good question.
That's the $1 million question, right?
Yeah. And this is probably where it's a bit outside of my domain, but overall you can earn. There's a lot of transactional areas where you can earn money. You have the card, which is you have the interchange fees, and if you can launch a credit card, even better. Interchange fees are higher, and you also earn an interest on at least those that are not paying in time. You have the transactional fees on payments, if you decide to charge anything there. So you have some transactional fees you of course can earn money on. And then it's a matter of, and I think actually Revolut is one of those that's been quite successful in that area, building customer packages where you build a subscription base where you find a way to bundle your products with a lot of add-on services as well. That is bringing a perceived value for the customers, so they're actually willing to pay somewhere between €1 to €30 a month or something. at least for consumers. Businesses, I think, is a bit easier actually to earn money on, because it's more normal for businesses from day one that you have to pay for an account.
Yeah.
So businesses, it's way easier to get to profitability and break even in your products, because it's more standard that you pay for services. Where consumers, they are given for free in many countries, and you need to find ways to monetize even the and at least from incumbents, not the good customers, where they don't have a mortgage and anything. Because in the incumbent banks, where they really earn money is mortgages, large loans, car loans, and so on.
Yeah.
So I think the real target for any bank, regulated bank, is to in time also have mortgages, also have like car loan, like all the bigger loans for your larger life events. I think that's where you really earn a lot of money. And in the meantime, you need to think about subscriptional services, transactional fees, and stuff like that. There's also interest, of course. But there's an EMI, and when you're not a fully licensed bank, of course, you do not get the benefits of interest. There you need to negotiate with the bank to be able to get something out of interest. So that's some of the disadvantages of being not a fully licensed bank, because it's not always you can get that much income from interest. And it depends on the partner banks you have in each market. But I think but again, it depends on the customer segment, and some segments are way easier to monetize than others. So of course, that's something you should probably also test as part of when building the business case early on. Is there something I can monetize or not? Yeah.
Maybe that should be probably one of the first things to think about, besides just, okay, so what we are going to build, but how we are going to make money, at the end of the day. No, but that's valuable. Also, one thing that you mentioned at the beginning was that, eventually a lot of these companies expand to providing B2B services. And right now, I don't mean providing business accounts, but technology. Becoming a technology providers, and I didn't realize that. But then, actually, a couple of years back, when a lot of those neobanks, they build app or they build some infrastructure, and eventually they use the app only to demonstrate the infrastructure. But eventually, the main business was B2B. Okay. And what about the go-to-market strategies? What do you think is the best go-to-market strategy? Paid ads or organic or some growth hacks or?
Can I just comment on the one before you said before answering? I actually think it's a natural journey of a lot of these, like the strong fintechs who end up building everything themselves, that they figure out. And I know that from my time at Lunar as well. You end up in a situation where you have some market leaders of fintechs that have built technology that is so far ahead of any incumbent that you actually realize that we can build quite an attractive business if we enable others to grow on our platform. And then potentially we build future competitors. But at least some of these markets, UK, the Nordics, and so on, the incumbents in that tech stack is not the most modern. So when you got these companies who's over 5 and 10 or 7 years have invested heavily in building something truly modern, I think it's natural that they end up thinking about selling that, even to incumbents in time, because I think they will realize that they could even utilize the fintechs and their infrastructure to actually bring a cheaper and better product to their customers than they can on their existing services. So I think it's actually quite a natural journey for all of those who's invested heavily in building infrastructure.
What about competitors, though? So if I provide my amazing technology and I've got this competitive edge, right? So it's faster, the onboarding is smoother, the app is more feature-rich and user-friendly. So what if there is a Lunar number 2, that is using my technology, right?
Yeah, but I think any bank has customer segments that they don't earn that much money on. Um, and again, now I'm taking the view that now I want to sell infrastructure. Then I know, yes, I'm going to potentially build competitors that are competing with some segments in another place of the bank. But what if that segment isn't that profitable anyway? Couldn't we earn more actually on selling our infrastructure? Then we actually earn money no matter if that end consumer ends up choosing us or the competitor, because we also earn money when the competitors, end consumers, uses us or uses them in that country. So I think it's a matter of maybe being confident that the product you have is good enough to also being able to compete with others. I think that's how you got to that position anyway. And then I think all competition is healthy because if there's only one dominant player in each market, in time they will either slow down and the new one will come anyway, or you. I think competitors keep you on the toes and keeps you innovating and building new great products. So I think that's it's important to have competition. I think so. Yeah, I probably see it in a way that could also be positive for the same business to allow your competitors to run on your infrastructure, because you can, in some scenarios, and even more when they attract certain customer segments than when we do it ourselves. So yeah, it probably depends on the individual business cases and the different segments and what you're willing to jeopardize versus competitors. But yeah.
I'm thinking if I have any more questions, because right now it makes kind of sense to me. So I know what license I should have. I know which features I should build, how to monetize them, how to go to the market. Maybe from the other way around. If there is there something that we haven't mentioned that the first time founders should think about when building a neobank, and we haven't discussed it yet?
Yeah, I think in the end, having some kind of, I think it's very important to be aware. We touched upon it. What problems and segments am I building products for? And being very aware of what is most important for me as part of getting to that target, because that will steer a lot of decisions in your path of building a new bank. Both of, do we want to be run on a banking as a service, or do we want to become licensed ourselves? What do we want to outsource? What do we want to build ourselves? Our go-to-market strategy, how to market ourselves, what customers to market towards, pricing, and so on. I think it's so important that you quite early on know what, initially at least, what problems am I trying to solve, and what is my more long-term vision, because hopefully you have an idea of this is the initial problem I'm solving and the initial segment I'm building for, but then also knowing like what is the next steps in that overall vision, and that can change many times as well. And you should always revisit that. But I think if you do not know who you're building products for and what is important for me slash us when building products, it will be very, very difficult to decide upon some of these quite important aspects, like outsourcing in how, like building stuff yourself, EMI versus full banking license versus BAS and so on. I think that's it's key to guide your decisioning on that journey.
Makes sense. Makes sense. At the end of the day, you need to solve a real life problem.
Yeah.
So that was one of the things that I saw 3 years ago. I would say a lot of the banks popped up, but they had all the financing, cool UX, nice features. But then at the end of the day, I was still using my main account, and I never get back to using them.
Exactly, and I think that's one of the. I think it's probably good for many of the fintechs today that they were all founded what now 10-ish years ago. At least most of the winners today, in a time when capital was profitability wasn't a key. It was more that you could grow and you could show significant growth. And I think if we had the environment that we had today, you probably didn't have such big players like Revolut, because they've also spent a lot of time growing without being profitable before they are where they are today. But I also think it's healthy that, it was a 3 years now when the market kind of changed, where profitability became in focus and it was hard to find investors, because that forces you to think differently and actually build a sustainable business. But of course, it also makes it difficult for new entrants, because if you can't show profitable and sustainable business quite fast, it can be difficult, I would assume, to get founders, capital, and investors for that idea you may have. So, yeah, it's in the end, I think we all need to be here to have something that's sustainable, especially when it's in banking. But I also think it has helped a lot of these now winners in the market that they had some years where they were allowed to just grow and really spend a lot of money building and expanding before now having to be met with expectations to be profitable. I think that has been key for them to succeed. But yeah, I haven't been that close to our investment rounds, but at least since that focus has also changed for investors around within the years I've been at Lunar, at least.
It's definitely. So I spoke with or I did interview with a company called Twisto and company called Brooks about fundraising. It was panel discussion and or books actually, and they said, hey, once you do the first or second round of fundraising, the founders are just running around raising capital. It's not about leadership. It's not about product anymore for the founder. It's just one big fundraising race.